For years, we've been told Wall Street is coming to Bitcoin. It's what founders, CEOs, and retail have all been pining for. And to be fair, Wall Street has come to Bitcoin, but I actually think we've been looking in the completely wrong place. Because if you actually follow where the money is following, I'm not convinced Wall Street's biggest bet is Bitcoin anymore. I think it's the businesses that make crypto work. And once you see it, you start looking at crypto completely differently, because crypto isn't just becoming an asset class, it's becoming an industry. So here's what I've noticed over the last few years. Back in 21, the conversation was, how much Bitcoin should institutions buy? That was the narrative, and Bitcoin was the destination. But today, I think something much more interesting is happening. Institutions still want Bitcoin. I don't think that's changed. But increasingly, they want everything else around it too. Take Circle, for example, a company built around stablecoin infrastructure. It wasn't a new blockchain, it wasn't another token launch, but it became one of the biggest IPOs we've seen in crypto. Reuters reports how they raised over $1 billion in upsized US IPO, and it is now publicly traded on the New York Stock Exchange. People still think of Coinbase as somewhere where you buy Bitcoin, but today that's only part of the story. They provide institutional custody, prime brokerage, trading infrastructure, USDC revenue, and services for some of the largest financial institutions in the world. Then there's BitGo. They're not trying to create the next meme coin. They're building institutional custody solutions for the likes of asset managers, banks, exchanges, trading firms, investors, estates, and governments. The kind of infrastructure large financial firms need before they actually start to allocate billions of dollars into digital assets. So when you zoom out, I don't think it looks like speculation. It looks like infrastructure. So what exactly are Wall Street buying? I think the answer surprises most people. They're buying the plumbing. And that is a very different investment thesis. They're buying stablecoin infrastructure, the digital dollars increasingly moving around blockchain networks, custodial platforms, the secure storage institutions need before they'll even consider entering this market, such as is provided by Fireblocks, tokenization, such as BlackRock's BitGo program, taking traditional financial assets and representing them on blockchain rails. And as we can see, capital markets are increasingly moving on-chain. Settlement and finality, moving value faster, cheaper, and increasingly 24 hours a day. And if you look across the industry, those are exactly the areas attracting serious institutional attention. Not because they're exciting, but because every digital asset transaction depends on them. And that's where I think most people have misunderstood what Wall Street is doing. They're not just asking, should we buy Bitcoin? They're asking, what part of the new financial system can we own? I actually think there's a much better way to understand what's happening. Stop thinking about crypto as one thing and think about it as layers. Because every financial institution and system has layers, and crypto is becoming no different. The first layer is Bitcoin. It's still the reserve asset. It's the gateway. It's the first thing people buy. It's still the asset that captures the world's attention. The second layer is stablecoins, the money moving across these networks. The third layer, exchanges, the companies connecting buyers and sellers. The fourth layer is custody, keeping institutional assets secure. And then beneath all that, settlement, payments, tokenization, the infrastructure making everything work. And that's the layer I think Wall Street finds incredibly attractive. Because unlike a single token, infrastructure doesn't depend on picking the next winner. It benefits from the entire ecosystem growing. And that's a really important distinction. And this is probably the best mental analogy I found. Wall Street doesn't just want exposure to crypto, they increasingly want to own the toll roads. Think about it like this. If you were running one of the world's biggest investment firms, such as BlackRock, what would you rather own? One Bitcoin or the exchanges where millions of people trade Bitcoin? The company storing billions of dollars worth of Bitcoin? The stablecoin used for settlement? The software every institution needs before entering the market? Those businesses earn revenue every single day, whether it's custody fees, trading fees, settlement, payments, or enterprise software. They're monetizing activity. And that's why I think they're becoming increasingly valuable. Compare it to building a motorway. You can own a single car, or you can own the motorway that every car has to drive on. Guess which business is going to generate more predictable cash flow? And that's why I think the infrastructure thesis deserves far more attention than it is currently getting. Now, a lot of people may hear this and think, so you're saying that Bitcoin doesn't matter anymore? I'm actually saying the exact opposite. I actually think this is one of the strongest long-term and bullish arguments for Bitcoin, because none of this infrastructure exists in isolation. It exists because people want to own digital assets, and if they didn't, the rails would not be of any use. And Bitcoin remains the flagship asset of them all. It's still where most people begin. It's still the biggest brand in crypto. It's still the asset institutions benchmark against, and it continues to bring new people into the ecosystem. If Bitcoin activity grows, trading activity grows, stablecoin usage grows, settlement volumes grow, exchanges become more valuable. In other words, Bitcoin isn't competing with the infrastructure, it's feeding it. And I think that's where a lot of people are getting this wrong. They're treating this as an either or. Either Bitcoin wins or infrastructure wins. That's not how this plays out. They either grow together or they die together. And if Wall Street is increasingly investing into the businesses surrounding crypto, I think that's a strong signal that they expect this ecosystem to remain economically important for many years to come. And Bitcoin is at the heart of it all. So a healthy Bitcoin is good for everyone. I actually think there's a really useful analogy here. Think about the smartphone. When Apple launched the iPhone was the product everyone wanted. But over time, the ecosystem around it became enormous. The phone remained the flagship product. But then came the App Store, payment processors, developers, e-commerce, an entire economy built around one product. And I think crypto could evolve in a very similar way. Bitcoin remains the flagship asset. It's the one almost everyone recognizes. It's still the gateway into digital assets. But around Bitcoin, we're seeing exchanges, stablecoins, custody, tokenization, payments, and increasingly, AI. An entire financial ecosystem begin to emerge. And this is where I think the story becomes even bigger than Wall Street, because this isn't just about institutions investing in crypto, it's about crypto slowly becoming a part of mainstream financial infrastructure. A few weeks ago, we talked about the Clarity Act and the idea that crypto was evolving from a speculative asset class into financial infrastructure. I actually think this is what infrastructure looks like. Stablecoins moving billions of dollars. Real-world assets being tokenized. Institutional custody. Digital settlement. Blockchain-based payments. These aren't isolated trends. They're all small pieces of the same puzzle. And that's why I think it's a mistake to analyze Bitcoin in isolation as an investment case. Because increasingly, it's sitting at the center of a much, much larger financial ecosystem. And here's something that I find really interesting. The average crypto conversation still revolves around one question: which coin is going to 10x? But when I look at what institutions are doing, they seem to be constantly asking a completely different question: which businesses will power the next generation of finance? And those are two very different theses. So my takeaway from all this is actually pretty simple. I don't think Wall Street has stopped buying Bitcoin. I just think it started buying something else as well. The infrastructure, the exchanges, the custody providers, the payment rails, the stablecoin issuers, the businesses building the financial plumbing. And if that continues, I don't think crypto becomes another investment sector. I think it potentially becomes part of the larger global financial system. And if that is true, we are still incredibly early. So I'm curious what you think. When Wall Street looks at crypto, do you think it's really buying Bitcoin? Or do you think that it's buying businesses that profit from Bitcoin? Or do you think it's probably buying both? Let me know in the comments. And as always, if you enjoy founder level breakdowns on crypto, news, capital markets, emerging technology and more, please make sure you like the video and subscribe to my channel, because I think the biggest opportunities often sit beneath the headlines.